what's up everybody? Welcome to the Average Joe Dividends YouTube channel. This is my portfolio update number 115. Happy Friday. And we're looking at right now, this is my taxable M1 stock brokerage account, my Average Joe Dividends portfolio. This is about 15% of my total net worth. We can see the performance of the portfolio over the last year. We are up 23.44%. We can see some kind of dips that go on here in the portfolio. And this is pretty much reflecting the market. You can see we go up and we go down and we go up. And then we had a recent downturn just, was it a week and a half, 2 weeks ago? And then we've been climbing back up. And then today we are down a little bit. But let's look at the last week. We went to an all-time high with the portfolio at $263,000, and now we're just slightly down, a little bit of a tiny bit of a correction today, just down a little bit at minus 0.43%, and we're not closed yet, so the market is live, so these numbers will be changing. If you're curious to see what's in this portfolio, it consists of 3 slices. I have an ETF slice, which is 2 different, one's ETF, which is SCHD, very popular in the dividend community. And then BST, this is a covered call closed-end fund from BlackRock. It pays a monthly dividend. We'll go back over here. And I have 2 other slices, and most of my individual positions are in here, in the dividend portfolio and the 12 dividends slice. I'm not going to go over all these today, but I'll leave a link below so you can see what is all in this portfolio. You can see though everything today is down. We can look at the last year and we'll see how the different slices have done. And we can see the best slice has been the 12 more dividends. And I'll click in there and I'll show you what's kind of been overperforming, and it's NVIDIA. For me, it's been doing quite well. As Oracle, KKR, you can see those returns. American Express, Allstate, things like that. But everything in this portfolio is, actually, this slice, the 12 more dividend slice, has done quite well. And then within the dividend portfolio, we'll see some of those and how they've performed. And you can see a little bit more modestly how they've done over the last year. You can see with Verizon, with a big rally coming back. It was like in the high 20s not too long ago. Now we're well into the 40s for Verizon. You can see some of them actually, looks like Pepsi has been down, as well as Cisco over the last year just a little bit. Same with Hershey's too. Hershey's has kind of been struggling, but Hershey's has grown their dividend quite aggressively over the past few years, over 10% each year. So let's take a look and see what I did. And the purpose of this video is to show you the buys that I selected in the first part of the week. And it's usually on a Monday. I'll deposit $100 and I'll let M1 do the picking. And that's based upon the allocations I have for my portfolio. And I'll show you how that's done. And we can see that we're 0.1% underweighted here with the ETFs. And then we're 0.6% underweighted dividend portfolio. So $100 on Monday likely is going to go into the dividend portfolio. And we can see we're overweighted with 12 more dividends. So likely going to go in here and to the most underweighted position within the portfolio. But on Fridays, it's different. I deposit $100 like I do on Monday, but I pick 5 stocks and I put $20 into each of those. So it's going to be fractional shares. But I'll show you that even the fractional shares do make a little bit of a difference. So we'll go into the activity log and we'll see those 5 buys. Looks like 1 cent could not be resolved, but I have 1 cent for the next time when I do like a dividend drip or my next buy. That 1 cent will likely be applied there. So we'll see where it was in Costco is where it couldn't resolve that 1 cent. I think it's because of companies that have a very high stock price. We can see Costco. Let's see if it shows the stock price. Yeah, $905 for a share. So it only bought 0.02% of a share, but it will move the needle a little bit. And I'll show you in just a little bit how it does that with the next dividend. And then next up was Lowe's. and that $20 bought more fractional shares. Then A.O. Smith, Procter & Gamble, and American Express. So those were my selections for this week. I'll click on done here. We're going to jump over to my Google Docs spreadsheet, and this spreadsheet tracks all of my positions within my portfolio. We can see company, ticker name, the share price, uses a Google Finance function to pull that so it's live. We're going to see this changing. And here's my average share price I have paid for each position. Here's the number of shares that I own, current market value, my cost basis. Here's my gain or loss, including dividends received. And here is the percent gain or loss. And anything above 25% will be in green. And all my positions are in the positive, but some of them are below the 25% threshold. That's why they're in white. Here's the quarterly dividend. I have two monthly payers, and that is O and BST. Those are in blue. And then here's the current yield and the current yield on my cost. The reason why the yield on my cost is higher for these positions is my average share price is lower. So that's the yield I'm getting off of my money that I've invested. And then here is the pay date. Everything is sorted by the pay date. Here are the dividends received so far in the month of September, and we're not close to being done. We have a whole bunch left. And I've received $227.08. I just woke up in the morning, and on these days, this amount showed up in my account automatically. Didn't have to do anything for it, didn't have to work for it, just woke up and it was there. And then here are the upcoming dividends. And the one we really don't know what it's going to be is SCHD. It's going to be a big one, but it's all dependent on when SCHD announces their next dividend. And we don't know what it's going to be, but I think it's going to be on the 24th is when they're going to announce it. Here's my prediction, 75 cents. So we're going to see my average monthly cash flow drop temporarily in Q3, but in Q4, I suspect it's going to go up because usually Q4 is the largest paying dividend for SCHD. And you can see here I've put in the dividends, the next dividend amount for Costco, American Express, A.O. Smith, Procter & Gamble, as well as Lowe's, because those are the 5 positions that I chose. What I want to do is I want to show you how that dividend is going to change for Costco. It's not going to move the needle much, probably by a penny or two. And the reason is you can see the yield on Costco right now is currently 0.52%. My yield on cost is 1.06% because I've more than doubled my money with Costco. And my initial investment of $1,088, if I sold it today, would be $2235.09. Of course, I'm long on Costco, which means I'm not going to sell it anytime soon. And Costco does not pay a high dividend, again, with that yield percentage. And the next dividend that will be paid in November will be $2.89 plus how much it's going to go up by the couple cents. But also remember that Costco pays a special dividend. And last year they paid a special dividend of $35.69. So their 0.52% yield is not really correct. When you factor in the special dividend, they pay it every about 2 to 3 years. And I got one too, it was like almost 4 years ago, $13.18. And that's my own less shares of Costco. And I only own 2.5. But you can't forget the special dividend because that was substantial, receiving at $35.69. Of course, I just dripped it back into Costco. And another factor with Costco is look at their last dividend increase in April. They increased it by 13%. So Costco is more of a growth stock. You can see with the stock appreciation as well as dividend appreciation as well. So that's why I'm long on Costco. And I think their business model is great. Their stores are always packed. They're always making sales. I don't think they're going anywhere. So we'll see how that changes. American Express, kind of the same thing, a lower yield percentage currently, but they grow it quite rapidly as well. Last January was 16%, and we can see with A.O. Smith, 7% was their last increase, and Procter & Gamble was at 7%. You can see these are not high dividend payers, but they like to grow it. And Procter & Gamble looks like has the highest yield percentage of my buys. And then Lowe's is similar, pays a lower dividend. And then last May, there was a 5% dividend increase. So what we're going to do here in a minute is we're going to grab some data from M1 to update the number of shares, average share price, and cost basis for the 5 positions where I bought fractional shares. So that's going to change the monthly cash flow average. This is going to go up probably by 15 to 20 cents, we'll see, because I bought very low dividend payers, but they're growers over time. So this is more of a growth play or a future play for this. So we can see right now the portfolio is averaging $1,012.80 every single month, but the portfolio doesn't pay it evenly. The last month of every quarter, that is every March, June, September, and December, pays the highest dividend, and while the other 2 months in the quarter pays a lower dividend. But when you divide that by 3, here are the quarterly payers all added up. And what I have to do is I have to add in the monthly payers in 2 more times. That's the math here, where it adds up all the quarterly dividends plus the monthly payers an additional 2 times. And that's the quarterly dividend. I divide it by 3, and then I get the monthly dividend. You can see here just annually, I could just draw $12,153.56 perpetually if I wanted to. And it's actually going to go up because these companies are increasing their dividends. So it's not just going to be the 12,153 every year going forward. It's going to increase every year with these companies increasing their dividends. But I'm increasing that even faster by buying more shares with my deposits, as well as stripping the dividends back into the portfolio. So let's go back to M1. We're going to grab that data. And this is from the holdings tab here, and everything is arranged by the largest position or holding, which is SCHD, almost $100,000 of SCHD 1180 shares. I'm going to grab everything starting with the name column. I'm going to go all the way down to the bottom. We're going to copy this data, and we're going to paste this into my sheet on the M1 data tab. And it's going to change these values. It's going to change the monthly, quarterly, and annual. But I've put the monthly here just so we know for comparison. We're going to see this go up a little bit, as well as these are going to change. The 720, and then these values here, the 289, 441, 372, 981 are all going to go up very slightly because it was a $100 deposit there. And it's not going to move the needle that much, but it's going to move a little bit. So over to the M1 data tab, we're going to paste in that data, doing a paste special, and it's going to update those 5 positions and update their shares, their cost basis, and average cost for all 5 of those. And that is complete. We go back to the dividend portfolio tab, and we'll see here that we added 3 cents to the next dividend for Costco. So we're going to be at $2.92, and that will be in November. So these are going to pay in the next 3 months. So these paid last in August, they're going to pay in November. And then next up, American Express. The last dividend was $4.41, and then $4.46 will be the new dividend. And then here, A.O. Smith, $3.72 was the last dividend. It's going to be $3.80. Actually, it's going to be more because October is when A.O. Smith usually raises their dividends. So chances are it's going to be another 7% on top of the $3.80. So we'll be getting close to that $4 mark for A.O. Smith, hopefully, in November. And then next up, Procter & Gamble, we're going to go from $9.81 to $9.92. So the needle moved the most there because of their current yield percentage is 2.34%. And then lastly will be Lowe's, and then they're moving from $7.20 to $7.29. Of course, you can see this is moving incrementally, not at a fast pace, but again, it was only a $100 deposit divided 5 ways. So, but it is making a difference though, and we can see here it added an additional, looks like 12 cents. So we went from 10.1280 to 10.1292. Let's go ahead and record that in the monthly average dividend tracking tab. Scroll all the way to the bottom here. Anytime I have an event like a dividend drip, a deposit, or there are dividend raises, I put those in here. So 10.1292. And we'll see what that change was, and we'll just kind of review kind of the last changes. So this is the result of the deposit. It's not a surprise because a lot of the stocks I bought are low dividend payers, but they grow over time and they have really good stock appreciation. So that's why it was only 12 cents, and some of my other $100 deposits have yielded more income as a result. And this 12 cents, it's stacking on top of the, already the 10, 12, 80, and it's going to be perpetual. It's going to be going forward every month. It's not just 12 cents one time. It's every month. We can see on the 18th, McDonald's paid their dividend. I dripped that back in, added 3 cents. JP Morgan did a dividend increase of 8.7%. So this is no additional money put in. This is just JP Morgan adding 21 cents to my monthly income just with a dividend raise. You can see more drips here. So you can see just for the month of September, we've had quite a few events. We'll see just so far, I've raised the income by $6.62 every month going forward. Just in September with these items right here, and just doing $200 of deposits per week, and that's it. So let's move on over to the dividend tracker tab. And I've been doing these videos since January 2021. We can see the starting portfolio value. We'll scroll down to where we're at now, where we're at 262, 200. This is rounded to the nearest $100. And then here's the dividends paid. The dividends so far received in Q3. Q3 is going to be gigantic because SCHD did not pay in Q2. That's why there is a shortfall there. So we're going to see a gigantic increase in Q3. And then here's the average monthly dividend. Here's again that 662. The monthly increase, here's a month-over-month gain of 0.66%. Now the annual dividend is now going up to $12,155 even. And then I've raised the annual dividends by $79.40. Here's $100 deposited. We update that. We're up to $600 in deposits. So I haven't deposited more than $1,000 in over a year now. It's just been $100 twice a week has been the plan for a while. And I'm thinking about in 2025 actually not doing any deposits and just seeing how this portfolio grows and how the dividend income will grow just by dripping the dividends. So I'm thinking about doing that experiment for 2025. We'll see though. I haven't fully decided. So we'll do, to close this out, is we'll go to my total net worth statements. And just with the stock market being at all-time highs, it's going to be no surprise that my net worth looks like it's at an all-time high. It is, at 1,725,801.13. And again, this is live. And of course, tomorrow or not tomorrow, but on Monday, we could have, a correction of 2%. Who knows? And it could just drop into the 1.6s, or we could go up even more. We just don't know. But we can see what most of my net worth is wrapped up in is in, my IRA, 401k, things like that. I do have a taxable brokerage account over at Vanguard, but you can see that by the ticker symbols, these are in ETFs, no individual positions at Vanguard. Here's my current employer, my 401k. This was started in March 2020. You can see the balance here. And right now, I'm not maxing out my 401k, but I do get my employer match on this. And it's in an S&P 500 fund with Fidelity. And then at M1, I also have an IRA here in more ETFs. We can see the value of that, $677,000. That's prior employments before my current employer. So that's pretty much 1996 to 2019 right there, that employment. And then here's the taxable brokerage account. Here's my M1 dividend portfolio that we just went over at length at 262. And then M1 savings account, I just saw when I logged in, they've lowered their interest rate from 5% to 4.5%. So, but, they were at the 5%, but Synchrony, they were at 4.5%. And I suspect they're going to be lowering it by a half point. We'll see. So I think M1 will still have the higher interest rate after Synchrony adjusts, but we'll see. but I'll move my money around accordingly. So that's cash there, and there's also cash here. And Capital One, last I checked, was 4.25% in the savings account I have there. Here is my home, which is just a 3-bedroom, 2-bath, very basic home. It's a nice home, but I just had it built in February. But nothing extravagant, just your average Joe home. And then here is the current balance of my credit card. I pay the balance off before it's due, so I do not incur any interest on it. So that's due, let's see, that is due early in October. So I'll pay that off here probably next week just to clear it out. And then here is my mortgage, which is, debt, $180,000. And what I've been doing is I've been incrementing $100 every month to my mortgage to kind of try to aggressively pay this off. And we'll see the breakdown of my assets here. We can see stocks is what I'm mostly invested in, and then home equity is only 8% of my total net worth, and then cash is 5.5%, and holding close to $100,000 there, $95,200 there in cash. And then here is the breakup between pre-tax and after-tax. And a lot of people never look at this. I think most Americans have most of their net worth locked up in their home in the form of equity and their 401k, and you can't tap that very easily. You can tap it at a penalty, or you can get it for your 401k to get a loan, or you just withdraw it, things like that. But I don't recommend doing that. Or you can get a HELOC loan, but you're paying percentage on that. You're paying interest on that. I don't recommend that either. So I would have cash on the sidelines, as well as an after-tax brokerage account. So you can, if you need to sell something or whatever, you have money there and it won't destroy your future for your retirement. So you can see it's broken up by U.S. international as well. Here's my average monthly dividend of all my assets, including the savings account as well, since they pay interest. So if I had access to my IRAs and 401ks, if I were old enough, here's what I would be rolling in on average per month from these investments. And we can take a look and track. We can see the dividends I receive by month. I started doing this in November 2022, W-2 income, subtracting my expenses for that month, and then showing the gap. And we'll fast forward to today, and I've only received one paycheck so far in September. My expenses are not closed out, so we're not done in September, but I will do the same thing here and close it out and put my total income and expenses. I had a bonus in here. You can see it's higher than normal. So I get 2 bonuses per year from work, and that was one of them. That was the last one in 2024. So I had a nice gap there. And I recommend you track to see what your gap is. There's going to be some months where you don't have a gap. You can see in November and December, this is when I was, starting to build my home, and I had expenses going out to get it built and things like that. And I also had a pet emergency where I had a sick pet, and there was gigantic medical bills, and that's the result of that as well, where I had negatives. I would have had nice gaps those months, but things happen. That's life. But I was fortunate in August to have that bonus, as well as pretty low expenses for me. And also I can see with my expenses, I can kind of get an average, just go over time from 2022. And that's something a lot of people don't know, is they don't know what their life costs. And here it is. That's what my life cost me. $4,500 a month is on average what it costs for my lifestyle. So, and I can easily calculate my retirement, things like that, because you can see what I'm spending. And in retirement, I'll probably even spend less than that. And by the time I do retire, this amount's going to be, I suspect it's going to be higher than what my expenses are. So, but we'll see. I'm sure I can add another $1,000 to that, and about $1,200 to make it so I could just live off of dividends and not even have to sell any of my shares of any of my companies. So So that's all I had to show you for the video. In case you missed it, here are my 5 selections: Costco, Lowe's, A.O. Smith, Procter & Gamble, and American Express. Thanks for sticking to the end of the video. Let me know what you bought this week. I hope everyone has a great weekend. Everybody take care.